What's up YouTube, it's Yemi here again from SwingTradeFX, and today's video is just a proof that I listen and I read through all comments, right? About a week ago, I sent a poll on the YouTube community and on the Telegram community asking what area genuinely are you having struggles with in your forex trading journey. And to my surprise, both the YouTube community and the Telegram community gave the same data. Most traders agree that it is trade execution, and that is the reason why we're making this video, where I'm going to be showing you a very high effective strategy of finding trade entries in the market. But hey, before we dive in, I want you to make sure you subscribe to this channel, and I want you to click the link in the description to join my free Telegram channel, where you're going to be getting more insight week in, week out as we dive into 2025, because it's going to be so crazy and I'm going to be so active with the free Telegram community. So let's get into the video and let's go. So before we get into it, I'm going to be talking about why most trader fails, okay? This has nothing to do with you being a professional trader or you being a beginner trader. It happens to all traders. And the simple reason is this: technically, right? Most traders have this perfect setups. Most traders have this ideal setup, but a lot of us as traders don't know the right time to get into the market. At the core of it, forex trading is really about having the right setup, which gives you an edge in the market, and having the right spot for you to get into the market with the right information, and having the right space to get out of the market with the right information. So it's really about timing your entry and timing your exit in the forex market. But in today's video, we're going to be talking about the entry, okay? So the reason why most traders fail is because it's not because they're not analytical. It's not because they can't analyze the market, they can't predict the market, but most people don't know how to get in. Perhaps most people don't have a system, a strategy for execution, right? When you want to execute your trade, you don't want to just get into a trade because you feel the market is going to buy on the sell. I've been there, right? And every now and then, even most professional traders make that mistake. But the beautiful thing is this: when you have a system that guides you, it makes it so easy for you to have your conferences you're waiting for. And if that doesn't happen, you're not going to find those trade opportunities in the market, or you're never going to execute your trade because there's no point losing your money, right? So that is the first thing. So you need to understand that forex trading is not about how good you can analyze the market. It has nothing to do with that. It's more about how can you use your strategy to spot and hedge in the market, and how can you use your strategy to find the right time to enter the market and the right time to exit the market. This is what forex trading is all about. So for us to understand that today, I'm going to be taking you in. So let's get into it. So for us to get into it, right, we're going to be talking about the elements. Let's start with the elements of trade entry. I'm just going to be talking about it in terms of trade entry. It's also the same thing for trade execution. So for us to be able to find the right strategy and discuss about the strategy we're using for trade entry, we want to talk about the elements of trade entry. What do I mean by elements? What are those things in what are those things you want to consider before you even decide that you want to be looking for trade entry? You know, most people just jump into the market and want to find trade entry. No, there are certain things that must have gone before you deciding that you want to find your trade entry. And the first one that we're going to be talking about today is you must have a clear understanding of the direction of trend. So if you're going to find any entry, the entry must be in direction of trend. You know, this is very, very important in the market, because a lot of people don't actually think about it in that way, right? They just want to get in. Oh, the market is going down right now, I'm just going to take in on a down trade. The market is going up, I'm just going to take in on an up trade or a bullish trade. You know, of course, this could work for scalpers, but I'm talking of if you want to have a very sustainable way in which you trade the market in a way that is so calculated and mechanical and is process driven, you must be able to have an understanding of the direction of trend, because your entry when it's all said and done, must be in direction of trend. And you're going to see how that factors in later. So that's the first thing, right? The second element that you must have figured out before you think of entry is what we call the point of interest, right? The point of interest is what is factoring this trade entry that I want to take, or why. What is this level? What is rejecting this level? What happens at the specific level that makes me want to decide to take a trade entry, right? So in some cases, it might be, oh, the market is sitting on an area of support. Oh, the market is sitting on a 4 weeks resistance, and I think the market is going to go down. Those are what we call point of interest. Those point of interest must give you a reason with respect to why you want to take the trade. So if you do not know the direction the trend is going, the market is going, if you do not know the reason why you want to take a trade entry right there, then your entry is literally just a gamble, right? So you must know the direction of the trend. You must know the point of interest, right? Point of interest meaning what is factoring, what is driving the reason why you think the market will reject at this level before you even think of discussing about entry, right? And the last thing, which is the most important thing, is your structural confirmation, okay? Your structural confirmation. What do I mean by structural confirmation? You see, I think I made a video on the difference between candlestick, entry confirmation and structural confirmation. If you've not seen it, I'm going to add that to the card above right now. I want you to go watch it, right? I spoke exclusively about the difference between candlestick entry and chart structure confirmation and entry based on my experience for many years in the market. And I gave you the reason why structural confirmation is way more stable, has the degree of high probability than just getting into the market with reversal candlesticks and all this bullish engulfment. No, the market is changing, and you want to be able to find a very much more conservative way and a possible high probability, entry confluences, right? And we're going to see where the structural confirmation factors in. And the whole idea of structural confirmation is you just want to have a knowledge of how do the market change structures. How do the market change from a bearish move to a bullish move, from a bullish move to a bearish move? If you do not have that, I'm going to add that to the card above on chart structure so that you can see the video. I made a very comprehensive video about chart structure, so you can actually check that out to just have a basic knowledge. Today we're focused on trade entry. So these are the three elements, right? Just so that you can connect the dot, right? The first thing is you must actually know the direction of the trend. You must know where the market is going to. So if the market is being on a bullish trade, on a bullish bias, for example, you want to look for areas where the market is probably going to retrace back to find a confirmation to continue in the direction of the trend. You don't want to swim against the tide of, the ocean, right? So the second thing is you must know, okay, this retracement is done. What factor the end of this retracement? Is it the support area turn resistance? Is it area of outright support or area of outright resistance? Is it a Fibonacci level? Is it a trend line level? You want to know all of these things. Then the last thing is you want to find a structural confirmation, which I'm going to be showing you, in the real life chart, and I'm going to be pointing these three elements out for you. The next thing we want to talk about are the tools used in trade entry. Tools used in trade entry. And this is very, very important, okay? This is really very important, right? As you know, in SwingTradeFX, our goal is to just simplify forex trading and take all the exaggerations away, right? You're going to realize that the tools you need to actually have all these winning trades are just a simple tool. You don't need to complicate. You don't need to be overly technical. You just need to have an understanding of how this thing works and be able to use them excellently, right? So we are going to be talking about the tool used, and it's going to surprise you that we only use just two tools, right? We have the understanding of chart structure. So basically, chart structure being a tool. Then the second one is literally trend line, right? So you can see how we repeat these tools, right? These tools have multifunctional, characteristics. You can use them to do a lot of things at the same time, right? So let me just dive into this one briefly so that we can understand that we can go into the live chart to see how that actually works. So for the chart structure, you want to understand how chart structure work. What do I mean? If the market is bullish, the market is probably going on a buy bias. If the market is bearish, the market is probably going on a sell bias, right? And for a bullish structure, it's characterized by what? The higher highs and the higher lows, right? We have the higher highs, the higher lows, the higher highs, the higher lows, the higher highs, the higher lows, the higher highs and higher lows, right? In the case of the bearish bias, right, we have the lower highs and lower lows, lower highs, all of them like in this faction, right? So what is the point? The point is, if you have an understanding of how structure change, right, that means you must have find yourself unknowingly stumbling on an entry strategy you just do not know yet, which I'm going to be bringing everything all together. And why do I say that? Let's move to the next page real quick so that I can give you just a proof of concept so that you can understand. You see, the way the market moves on what? Bullish, high, low, and stuff like this, right? It moves on a push exhaustion phase, right? And for the case of the sell, the market move on a push and exhaustion phase, right? So from a macro picture, let's take it this way. So from a macro picture, if the market is moving on this and this, best believe the market is moving on smaller structure in this way and form, right? And when the market gets here, something happens right here, right? And also something happens right here. So all of these key levels right here are areas where you can find trade entry opportunities in the market. And the whole idea is very simple, right? As the market is making this push phase, right, on the smaller time frame, it's going to give you higher high and higher low, higher high, higher low, higher high and higher low. But do you notice that when it starts to retrace back, something happened right here? This last higher low got broken right here, right? And what is the principle or the primary rules of structures is that when a structure breaks, it means that a new structure is beginning to form, meaning indicating that a new trend is beginning to happen, right? And you can see that factored in right here when the market was going bullish and all of a sudden it turns bearish and is going bullish. So now within this framework, you can see a lot of opportunities. Now the market started to move on lower low, lower high, lower low, lower high. What happens right here? This is a lower high right here. What happens right here? The market broke this again, indicating what again? Indicating that the market has changed its direction to the upside. So these are all areas of trade opportunities in the market. So when you have this understanding of structures, right, you can be able to actually decipher, an entry strategy around here. But that's not the only thing that you need. So let's move to the live chat to understand. And this concept are so simple the way you see them, right? You don't need a lot of information. You just need to have a basic knowledge of how chart structure works, right? And if you find this really helpful so far, because I'm going to be connecting the dot on the live chart. If you really find this so helpful so far, you can actually have access to more advanced strategies and advanced methodologies than these, going through my freedom course, so you can actually get them right there. I speak so much about how you can use these different tools in different ways to achieve optimum results in the market. And if you're very serious about taking your trading to the next level, understanding advanced strategy and just precise strategy with no noise and no complication of what you need in the market, you can sign up to the full SwingTradeFX freedom course on www.swingtradefxacademy.com. You're really going to get that. I can assure you that. Simplified Forex strategies that work effectively and with high level of accuracy. Okay. So let's get into the live chat and see what we've got, and let's connect all the dots together. So we're here on the live chart, and I'm going to be showing you how this works. Okay. I'm just going to be doing 1 or 2 or 3 back testing and show you how this literally works. In fact, I'm going to be taking it back and I'm going to be taking it down just for you to see. I'm just going to pick anyone randomly from anywhere. So I'm just going to be using the 1 hour time frame to just show us how this works in the market. Okay, so like I said, There are three things you want to look out for that gives you the basis or precursor to finding your trade entry. The first one is you want to know the direction of the trend. That's number one. Number two, you want to know what factor in the point of interest. Then number three, you want to have the final structural confirmation, which is where you're now going to execute, this strategy, and you want to see. Like I said, you only need two tools to finding high probable entry in the market. Okay, so let's look at it carefully. So I'm just going to pick some examples so that we can see it and we can have an understanding of how that works in the market. So the first one is, let's take this for example. And let's see how it is. So let's look at what the market is doing right here. We have a situation right here where the market has been on a very strong bullish move. Now, I'm not going full into the analysis. I just want to show you those specific point of entry and how you can connect that so you can analyze yourself and just arrive at this point of execution, right? And all of a sudden, the market has started to make the move to the downside. How do we know that the market is making a move to the downside? It's really just so very simple. We could see right here that the market broke this structure right here. So this break of structure right here indicates just simply that the market might have just been done with, all of this move to the upside right here, right? That the market might just be done with that. And we want to see the market give us some kind of like pullback before we go to the downside. Now, the market came right here in this area of resistance right here. And you can see this is an area of resistance right here that factored what? This factored into a possible point of interest, right? So we know that now the trend might be going to the downside, and now we have a possibility of a point of interest right here. So what factored in the point of interest right here? Market is rejecting that area of resistance, right? If there are other things we want to add, we might as well add that the fact that the market is rejecting the touch of trend line. As you can see, the trend line rejection right here. So we've gotten the direction of the trend, we've gotten the point of interest. So what is the last thing I want to do? The structural confirmation. So the first thing I want to do is identify the structure, right? I can see the bigger structure right here, then I can see the market moving on a smaller structure right at this point. So if I'm going to be selling this trade, I'm going to be looking to taking this trade to this level, right? So what is the last thing you want to do? You want to now identify the structure. It's literally so simple. It's so hard to believe that it's as simple as this, right? And that's because everything you need in the forex market to actually become profitable are the simplest stuff, right? People just exaggerate these things, right? High, then you have low, then you have high, you have low, you have high, you have low, you have high, you have low. So you want to identify the last low, right? So what do we have right here? We have the market making the last low right at this level. What happens right here? Market has broken the structure. So what do we have right here? Market has broken the structure. So what is the next thing you want to do? From just the structural break, we have an understanding. From just the structural break, we have an understanding that this market is actually ready to change this trend to the downside. Okay. So the next thing we want to do is we want to just identify the trend line, which is the counter trend line. So confirmation number one. Now this is where structural confirmation comes in. Confirmation number one is that the progressive higher highs and higher low has been broken right at this point. Confirmation number two is I just want this trend line to get broken. So what happens right here? You go to the lower time frame, depending on what you want to use. You go to the lower time frame and you want to see the break of the counter trend line. So what do we have right here? Let's go to the 15 minutes time frame. Do we have the break right here? Yes, we have the break right at this point, right? And we have the retest. So upon that break and retest, guess what? I'm going to be entering into this trade, and my stop loss is going to be right here. I'm going to be making a full video on setting stop loss, and I'm just going to be looking to take in my profit right here. This is going to give you a beautiful 1:2.4. Notice the tools we use in final entry. Understanding of structural confirmation, number one. Then we use the counter break of trend line. Why? The question is, why do we use the counter break of trend line? It's very simple. Trend line is used to measure the strength of a trend. So if the structural break invalidates that this trend is no longer going this direction, and it means the market wants to move in another direction, and the tools that we use in actually measuring the strength of a trend also breaks and fails. What does that mean? That means the trend has changed. You just want to position yourself in, and you just want to get in. Let me show you another example. Perhaps let me use even a more recent example. As you all know, I trade GJ. So I'm going to show you one right here. So let's go back to the 1 hour time frame. You don't need a lot to analyze the market. So this is one right here. So now look at this, right? We are having a situation right here where the market is actually making a strong push to the downside. I remember I took this trade. If you watch the 100 to 11,000 series, right, you're going to notice that this was the last trade I took. And I'm trying to look for examples of trades I took. So when you look at this, where's the direction of this trend, right? Depending on the time frame you look at it, right? This trend started right here, right? And the market was pulling back to this level, and the market was ready to go to the upside, right? However, within this trend, you can see all the small structures, you can see all of them form. All of this structure right here, you can see all of them form, and it started to drop. The market starts to drop, and it pull back to the 61.8 level. So when you break out your Fibonacci, you're going to realize that we have the 61.8 Fibonacci level right here. So, and also, not just this point being a 61.8 level. Okay, let me just take this out. So not just this point being a 61.8 level, this is also an area of support, right? So now what do we know? We know that the uptrend is ready. We have the market area of support, not just an area of support, we also have it right here at area of trend line. So we have a confluence, right, of area of support and just the trend line actually, affecting a point of interest for us. So that is the first thing you want to do. You want to identify direction. We know the direction is going to the upside. Then you've identified the point of interest. What's the next thing you want to do? It's pretty simple and straightforward. You want to identify the structure, right? Because you're waiting for a break of structure. So we have a lower high, lower low, lower high, lower low, lower high, low. We have a lower high. We have a low right here, then lower high, then we have all of this low and lower high, then we have the market make this move to this level. So that is the last significant lower high right there. So not just that area being the lower high, then within this structure right here, we start to have another lower high, and lower high. And this is what I want to see. So first of all, we have that to that level. So I want to bring out my counter trend line. Do you see that? I want to bring out my counter trend line. So I know that when the market breaks this structure, now the what gauges the strength of trend line is what gauges the strength of a trend, sorry, is actually the trend line. So the trend line right here has given up right at this point, right? Then I know that I have to wait for a break of the structure before I enter, right? But however, I also have a knowledge of the fact that the market was also moving on this smaller structure as well, lower high. So what do? I identify the smaller one as well, as you can see right here. Then I identify also the counter trend line right at this level. So the first confirmation I have that the market might be ready for a buy was when the market broke this trend line right here. Okay. However, I need the structure to get broken. So what happened right here? The market refused to break the structure right here. Remember two things: the trend line break, which means the strength of this trend is getting done. The second is your structural break, right? So what do I have right here? Do I have a structural break right here? No, I didn't have a structural break right here. It didn't happen right here. However, it happened right here, but the market was right below the other trend line. So as the market start to break into this level, we want to get into this trade. So you want to go into the lower time frame, like the 30 minutes, right? So what happened right here? The moment the market broke this structure right here, what do we have right here? We have the moment it broke right here. So as the market is breaking right above to this level, What do I want to do? I want to enter this trade where I feel so confident about the market, which is right here. So you want to have a stop loss right at the last low at this point. Mind you, we're entering this on the lower time frame, right? And you want to take a trade to the next level, right? This trade will guarantee a very good swing opportunity of 1:5. And this is how you get it done in the market. Okay, this is how you get it done. So you can see the element of our trade, which is what, first of all, we know the direction of where the market is going. We know it's going up. We want to find point of interest right here. In this case, we have a area of support and the trend line support, right? And then we're waiting for what the structural break and structural confirmation, and also the counter trend line break, which the counter trend line is the main tool that we use in actually identifying if a structure is still strong or the structure is not going to hold, right? So that is how we do it in the market. So let me give you one last example so that you guys can have a clear understanding of how this works. I want us to look at this also. Let me clear my chart off. I want us to look at this final one also. So look at this, right? This market started, the moment the market pull back to this level, we saw the market start to move on a higher high. What do we have right here? We have a higher high, higher low, and a higher high. This is all I need to establish the fact that the market is making a move to the upside. And where do I think the market is coming to? If eventually we find an area of entry right here, the market might be coming up to this level. So what do we have right here? All you got to do is to have an understanding of how the market is moving, right? We know that we have a low right here. Then we know we have a higher low right here. We have another one right here. So now the market is making a pullback. What are the different things I want to use to see what the market is doing, right? I want to bring out my Fibonacci, right? So on the Fibonacci, I have a 61.8 Fibonacci level right here, also indicating a point of interest for me, right? So that is all I need. So the next thing I want to see is a break of structure, right? So for me to understand the break of structure, I need to identify the structure. So we have a lower high, we have all this lower high right here, and I want to identify that out. So what does it look like? I have the market giving me this right here. So what do you want to do? You want to bring out the counter trend line that gauge the strength of the trend line. So now, the counter trend line gave in a signal first, right? Look at it. It gave us an early signal right upon this break and close right here. But then we are not really interested in that. We want to see the market break to the upside. So what do we have right here? We can see that the market, it broke right here, and this is it right here. So what do we want to do? We want to buy the market to this point. What happened in the market? You can see the market moved and moved and moved, and the market finally touched our area of take profit, depending on how you want to say it, right? For a 2.5 risk reward ratio. So this is how you get it done. It is so simple yet the most effective. It's one of the most basic strategy I've used, I've delivered results for me. Of course, there are much more advanced strategies that I use in the market, which if you want to take, you can actually sign up to the full freedom course, which you're going to be having all of these things broken down for you. The point is this, right? Most of what works in the market are not the most complex things. Most of what works in the market are the easiest thing. You don't really need all the hard tools or the private level and all of these levels to make a good trade in the market. And I want to challenge you guys, right? Even as you move into your 2025, right? Your goal should not be to complicate Forex. Your goal is to use the easiest thing, master them, and repeat them, right? This chart is not what you're trading. You're trading your mindset, right? So your ability to just replicate what is in your mind on the chart, using the chart as your canvas, is what makes you an actual trader, right? So I challenge you to go on the chart and go do this thing. Remember, the summary of everything we're doing is just finding entry. And for you to find entry, you must have some precursors, which is what? You must know the direction. You must have a reason why there's a point of interest. If there's no reason, then you shouldn't enter that trade, because you're not going to be having the confidence you need. Then the third thing is you must wait for structure confirmation. You must use your tool, of course, the trend line tool, which is used to gauge the trend of the strength of a trend, and you must use that to get into the market. So I hope you guys find so much value in this. 2025, I'm going to be more available on YouTube, and my goal is just to be the stop shop on YouTube for where you can find simplified concepts that produce high profitable returns on the market. So thank you guys so much, and God bless you guys. God bless you.